Now, probably nobody knows who this is, right? No. So this guy is named Lewis Ranieri, and he became famous. I've talked about him on the podcast before. He became famous for something that changed the entire world. Well, I guess I shouldn't say he became famous. He really is not very famous. Nobody knows who he is, right? But he was in a movie called The Big Short. You all saw that movie, or you read the book probably, Michael Lewis's book, right? And Lewis Ranieri did something that changed the world in a big, big way. He invented mortgage-backed securities in the early 80s. And that is one of the big reasons, besides the Fannie Mae, Freddie Mac, these pseudo-governmental agencies, that is one of the reasons we have the most special real estate market in the entire world, in the United States. How many of you have ever thought of living overseas or investing overseas? Anybody? Yeah. And the issue you have is that you don't have these fantastic 30-year mortgages at these incredibly low government subsidized rates. Now, a lot of you have probably been at one time or another upset. And now that we're seeing all of this stuff come out with Doge, you're probably really upset. And you have every right to be, because we have been getting completely robbed for decades. And that's what we're seeing, okay? So love or hate Trump, you can't hate Doge, because this is wonderful. All this corruption that is being uncovered now. So a lot of you have probably become very upset at one time or another at people who are leeching off the system. And you thought it was the welfare recipients, the people claiming disability that don't really have disabilities, that are getting, money from the taxpayers. And that's a total scam. But then there's Elizabeth Warren and Nancy Pelosi, and that's the biggest scam, right? But here's the deal. The old saying, if you can't beat them, join them? If you can't beat them, join them. You want to get your government welfare program? Go get a Fannie Mae or Freddie Mac mortgage. That's your government welfare program. It's subsidized. And that is a subsidy for real estate investors. So take advantage of that subsidy yourself. And this guy is who really kept this whole thing going and made it all possible. Incredible, incredible story. Maybe go watch The Big Short again, okay? All right, so we want to get to the next level. Most of us are familiar with Rich Dad, Poor Dad. Here's kind of my different interpretation of it. You start out as an employee or a self-employed person. You become a business owner. So back here, your own efforts are earning you money. Here, efforts of other people are earning you money. And here, as an investor, that is the real success, because not only are the efforts of other people earning you money, but the asset itself is earning you money. And when all sorts of things happen to impact that multidimensional market dynamic of supply and demand with real estate, you get richer and richer. And look, I don't have to prove it to anybody. We all know many, many people who got very, very rich in real estate. Yet we probably don't know anybody who actually got rich in the stock market. Maybe I always hear one person say, well, trading options, right? Maybe, I don't know. That's a lot of studying, it's a lot of work to do it, but maybe. Or starting your own business and then taking that business public. Of course, you can make a fortune doing that, right? But not as a direct investor. It's a tool to perpetuate wealth as best and have Wall Street basically steal your wealth at worst, right? So this is an interesting thing. And when you talk about making money off the efforts of others, right? In a business, you have employees that you need to manage, right? And their efforts hopefully will earn you more than their cost. That's the goal. But if you own a rental property, think about this. You don't have to manage any employees necessarily, unless you want to build a big empire and have employees. But what you have is something like this. When you qualify a renter, you look at their debt-to-income ratio, right? And you want to know they can afford the rent for your property. So you might let their rent be as high as 40% of their income. 40% of their income is 12 days of every month. So the first 12 days of every month, that renter is paying your rent. They're working for you. That's an amazing arrangement. It's really cool. You don't have to manage them. Maybe you talk to them a couple of times a year, but they're using 33 to 40% of their income to pay you, right? And all of the management responsibility is their employer's responsibility. They just have to bring home the bacon, and you get 12 days of their month. That's 40% of every year. That's 146 days of every year. You know those things you always hear around tax time, that every year all of us work for the IRS until May, right? You've heard this, right, many times. Well, your tenant is working for you for the first 146 days of every year and the first 12 days of every month. Like, seriously think about that for a minute.